Welcome to another BRRRR interview designed to inspire and educate by sharing short profiles of Canadian real estate investors. My name is Ryan Kirk with BRRRR, Gemaki Real Estate Wealth, where we help busy people grow their wealth and freedom through investment real estate. In this episode, our guest is Sarah Larbi, a real estate investor known for having 9 properties by age 33. In fact, she just recently quit her job in marketing to focus on real estate and improve her lifestyle. Sarah focuses on the BRRRR strategy: buy, renovate, rent, refinance, and repeat. And she uses joint ventures to grow her portfolio in a few cities west of Toronto. Here's Sarah.
So, Sarah, how did you get started in real estate?
That's a great question. One day I went to the bank and realized I didn't even know the difference between an asset and a liability when that financial advisor there was asking me to do, a summary of what I've accomplished over the time that I've been working. And I didn't even know that. So I literally went home and started Googling how to become wealthy and how people become rich and retire early. And, obviously paper assets came up and businesses starting that came up, but as well as real estate. And I started thinking, okay, maybe the real estate realm is the way to go, and learned from there, read books, listened to podcasts, and jumped in on the cheapest thing I could afford back in 2013 and didn't look back from there.
So, what was it about real estate? Why did you choose that over some of the other assets you could have invested in?
It made the most sense to me, where I also had the most control, right? When you look at real estate, you've got the cash flow, the appreciation, the mortgage pay down. It's quite forgivable over time. And you look at what it's done in the last 10 years, in the last 20 years, it was the surest way for me to be able to retire early and to be able to grow my wealth. Where paper assets, not that there's anything, wrong with them, but I don't feel like I had as much control over that versus, buying a piece of real estate and renovating that and putting my own tenants, choosing them and screening them and all that stuff. And of course there's ups and downs, and no method is 100% foolproof. But I will say that I liked the fact that it just gave me more control versus the other things. And, starting a business is a great thing. I'm just not that original. So, starting a business just seemed like it was going to be a whole other full-time job. So I had to factor in the fact that I was, working 40, 50, 60 hours a week on my job some days or some weeks. And I had to have something that would complement it, that I could do it without interfering with that.
I see. Yeah. So, you bought the cheapest thing you could afford in 2013, but what has been your main investment strategy or specialty since then?
So I am a big fan of the BRRRR strategy. So essentially it's a mix of flipping and buy and hold, right? So you're buying the property, then you're doing the renovations, you are renting it out, you're refinancing, and then you're taking that money from the refinance to keep going and buy your next property. So that's what's helped me. 7 years later, I've been able to quit my job and, and not look back, which is really cool. Now, that's not to say that I'm retiring and I'm going to just do nothing for the rest of my life. I love real estate. I'll probably continue doing it. But, now I have all this other time that I can actually enjoy the fruits of my labor and what I've been working on. So really the BRRRR strategy is what I found has worked the best for me, so that I can really buy something, fix it up nicely, and reuse that money for the next deal.
Perfect. And tell us about the best deal you've ever done.
I call it a BRRRR-in-one, right? So it's like a hole-in-one. So it's essentially the BRRRR strategy, when you're able to pull out everything that you've put into it. So your down payment, your reno money, your holding costs, and then you make money at the end of the day. So just as an example, and you don't have these properties all the time. I'd be fine with, a lot of them. I will get my reno money back out, my holding costs, and a portion of my down payment. I'm happy with that. My return and my profits are still decent, even though I have a little bit of original money left in it. But the best one I've ever done was I think there's a YouTube video on it. It was 151,000. I put about 30 grand in, ARV'd at 275 or 285 back then. Anyways, I made an extra 40K in my pocket within a matter of, so it was renovated during 3 months. And I held it maybe for like 9 months total. We had some tenants in there for 6 months prior. But when you can take all of your money back out that you put into it and still make about a $40,000 extra, then that's a pretty sweet deal.
That's amazing. We'll put a link to that video in the description of this one so people can see that story. And
Awesome.
that's an exciting story, but what's been your worst real estate mistake and how did you recover from that?
You know, when we first started, even though like the books and the podcasts help, you really learn by doing it and then taking action and doing something about it, right? And the first one, we've made all the mistakes in the books. So we rented to my sister-in-law, didn't really understand how to find a property. We hired a great guy, but he was a realtor from a different area, not the area that we were looking to buy in. We didn't really look at what the market rents were. We're like, well, how much can you afford? Okay, you can afford this much. Sounds good. And like we missed out on opportunity. You know, it doesn't mean that we lost money, but we definitely didn't, you know, do as best as we could. And we definitely didn't vet her because she's family. Guys don't rent to family. But I will say we had to BRRRR the house a second time when she left because it was unfortunately, and I hate saying the story, but you know, it was not in good shape, you know, upon their move out. So I will tell you, everything has a great story if you keep the property and you cash flow the property. We have some great tenants right now. That place looks like it's from a magazine. I'll tell you this. So the tenants have changed over 2-3 times, which is a good thing in a market like Ontario with rent control, because then you can bump it back to market rent. So now we're getting a really good rent, you know, price as well as a great tenant that takes care of the place. And you know, the bad story has become a good story. But so just to summarize that, you know, work with a realtor that's local, that understands the area, understand the market rents, do a really good job of screening your tenants, even though you think that they're going to be fine, because it might, you know, surprise you what you find. And then the big thing too, is we went directly to the bank. We didn't find out that mistake probably till 3 houses later, 3 properties later. But you know, each bank has different criteria, and in order to scale a portfolio, you need to do it in a certain order, especially in Canada, and you need to understand what lenders do what. So work with a mortgage broker. You don't need to figure all that stuff out because it is a whole other, you know, probably full-time job to understand all the lenders. But you know, there's not just banks, right? Mortgage lenders, mortgage brokers have access to trust companies, credit unions, private funds. Like there's just so many other things, and you have to know how to position it at what part of your strategy based on your goals.
Yeah.
So all mistakes I made and recommendations, I hope somebody listening to this doesn't make the same mistakes as me.
Yeah, that's great. As you said, the books, the podcast, they all really help, but taking action is what makes the biggest difference. But what were the things that you turned to get advice and help? What's been your biggest source of information in the industry?
You know, ironically, probably starting my very own podcast where I can hire my own or have my own guests on the show and ask some questions. I think that's been amazing, and just building those connections. But they say your network is your net worth, right? And so just surrounding yourself with other people like that. When I first started, I didn't even know that there were different networking groups and meetup groups and, you know, or different types of virtual events that you can attend, and other people that have the same mindset as well, right? And so, you know, surrounding myself with people that were doing what I wanted to do or doing what I was doing helped tremendously. You can run ideas off each other, and it's just real life examples and, you know, other Canadians, other people that are in your markets. I think that's important, and also doing it at the same time, because, you know, you can share advice with people that are currently doing it versus, who knows, sometimes you hire somebody and the last deal they did was like 20 years ago, which is totally different or not in this market. So I think just trying to figure out who is doing the same as what you want to do in those markets, and then just working, you know, building those relationships.
That's great. Have you had any significant partnerships or joint ventures that have made a huge difference?
You know, it was really important for me to build my own portfolio. I love control, as you know, and it was important for me to be able to build that first in order to be able to fully leave my job and to acquire using my resources, right? My financing ability, as an example. And because of the BRRRR strategy, I was able to recycle the money into the next deal. So it's not like I was saving for every single one. Now, I will say that now that I've left the job world, one of the things that I'm doing is I am going to be looking for joint venture partners to be able to, you know, help them as well. Just like I've, you know, been able to scale. Not everybody is going to do what I would do, right? Some people want to be more passive. Some people actually want to maybe learn a little bit from me along the way. Some people, you know, there's going to be lots of different reasons. And so I've been talking to a lot of great people that need a little bit of help and want to work with me. So, in the past, I was so busy with everything else that I was doing, I just didn't have time to focus on the JVs. And I'm not saying I want 100 because that's just going to be, too much. But if I do like 5 a year, 5 or, I would say not so much more than that because I still want to enjoy my lifestyle a little bit. But, I am open to it now. And I think that the other thing I would just say is, as you're looking at your strategies and what your goals are, I always break it down into two. You have like your nest egg portfolio, and then you have your accelerator portfolio. So my nest egg is what I've built on my own so far, which I've BRRRR'd, and then essentially I'm holding on to those. And then my accelerator portfolio is going to be like, for example, the JVs where we might have a 5 to 7 year out, and then that money that we split, my part, I'm going to actually start paying down the mortgages even faster to accelerate that and to increase more cash flow into my nest egg. So that's essentially what the strategy that I'm doing is. It's not to say that like everybody needs to do it my way. Some people do amazing just starting off with joint ventures right off the bat. And you'll see everybody's journey is going to be a little bit different. Everybody's strategy, even within a strategy, is going to be quite different. And so find something that works for you.
That's great. Yeah, that's cool. What about for people who haven't started yet? They've been learning, they've been researching, but they haven't pulled the trigger and started investing. Any advice for those people?
Yeah, I mean, probably I would say like why, right? What's holding them back? I would look at figuring that piece out. Is it money? Is it financing? Is it mindset? Is it maybe they don't feel like they have enough of the right education, the right team. So figure out what the issue is, and then find somebody that can help you get there, right? So if it's, for example, like you don't have the right, you don't feel like you have the right team or the right education or whatnot, hire a coach. Hire a coach to exponentially, get that going for you. If it's money, if it's, financing ability, like work with a JV partner as an example and find a way to find one. And if you don't know how, as an example, you can read books, you can listen to podcasts about joint ventures and attracting money partners or whatnot, or hire a coach to help you do that as well. But I would say just drill it down to why. And there's always going to be something. There's never going to be a perfect time. I'll tell you, there's COVID or this pandemic is happening right now. At some point in 2 years, it'll be gone. Something else will happen, and it'll never be the right time again. So at some point, if the deal works now and it can cash flow now, even if the market takes a little bit of a dip, 20%, as long as the cash flow, you just ride that wave, and things over a decade will look amazing, and you'll be happy regardless of when you got into the market.
Yeah, that's so true. That's so true. You've shared a ton of valuable advice, and you mentioned you're looking for joint venture partners, but also that you've got a podcast. Can you share a little bit more about your business now and how people can get in touch with you?
Yeah, absolutely. So I actually have 2 podcasts. One is my own that I do. It's called Where Should I Invest? It's on Apple and Stitcher and wherever else people get podcasts from. And the other one is called The Right Club. It's REITE Club. And that is actually, there's a whole online Canadian community for investors that we are building, me and there's 4 of us in total. So if you guys check that out, there's actually monthly webinars that we do. It's educational. You can actually connect with others. You can build a team from there. There's just tons of great information. It's therightclub.com. And that comes with a podcast as well. Other than that, I mean, I do offer, like different, different programs, like we do like a 3-month BRRRR class, and where it's a mix of like live on Zoom classes plus in field. And there's just a few different things. So if people want to see what I'm doing when it comes to that, they can check out sarahlarbi.com.
Okay, perfect. And we'll put that up on the screen and a link in the description as well. Sarah, thank you so much. You've shared a ton of value and really appreciate your time.
Thanks so much for having me.
Okay, the main takeaways from this interview with Sarah is her love of control. Real estate provides control over your investments as opposed to paper assets like stocks or mutual funds, where you have little or no influence over the value of the asset. With real estate, I can renovate a property, I can sever a lot, raise rents, but how can I affect the stock price of Apple? Go buy a new iPhone? Real estate gives you control. The second takeaway is to work with a mortgage broker in order to position yourself to scale. If you intend to own multiple investment properties, then it's crucial to secure loans in a strategic order. All right, thank you so much to Sarah. She shared a ton of valuable information from her experience. Make sure you check out Sarah's website and her podcast. I actually was a guest on episode number 12, so you can see all the links to that in the description below. Okay, Canada, thanks for watching and happy investing.